Good morning, good afternoon, good evening. This is Tom Jordan, president of Jordan & Jordan, and welcome to the Fixed Trading Community webinar on navigating the ETF lifecycle. We want to especially welcome the Fixed Trading Community membership, the premium members, the regular members, and also the guests. The reasons why I said good morning, good afternoon, good evening, because this is a global event. We have over 200 people registered from Asia, from Europe, and from the USA, and that's the reason why we have it at 8 o'clock in the morning, to try and be as cooperative as we can for the global community, because this is a global topic. We will take questions during this webinar by clicking on raise your hand at the bottom, the symbol at the bottom of the screen. We'll follow Chatham House rules, which basically means we are recording this, but to quote anyone, you need the permission of the person that you wish to quote, and probably the best way to do that would be to contact Deborah Heffron. We want to thank ICE for sponsoring this webinar. This is the seventh in a series. We have an event each year at Goldman Sachs, and of course we couldn't have it this year, but we had 5 webinars instead. And then we have an event in Boston, and State Street hosts that. And this is the second in the State Street event series, and both Goldman and State Street have committed to do it again next year. We will see if we're doing it this way, or probably we'll be doing it this way rather than being in person, but let's look at that later. And there'll be a couple of more webinars this year, one having to do with Latin America and the other one having to do with outsourced trading. So we're going to talk about the ETF primary volumes, but I want just to ask Peter to introduce ICE. They were kind enough to sponsor this webinar. So Peter, can you just say a few words about ICE?
Yeah, and thank you, Tom, and thank you, Deborah, and the Fixed team. So those that have joined, from the ICE family, we hope that you, your teams, your families have stayed safe through these challenging times. And these virtual panels and webinars are the thing of invoke things. So we appreciate you gathering, and we look forward to the conversation today on the ETF landscape and what we're thinking and what the collective group is thinking around how FIX can play a part going forward. A little bit about ICE. I'm sure most on this call are familiar with the name ICE, the brand. We are a leader, a global leader in a variety of different aspects from financial markets, from clearinghouses to exchanges to mortgage technology to data, listings, ETFs. We operate in multiple different regions, offering solutions across the financial markets. What the focus is today and how ICE is getting even deeper involved in the ETF space is around how we're trying to help improve the primary trading market, using FIX as a key protocol to bring standardization and efficiency into that workflow. So I look forward to speaking in more detail with my fellow panelists and bringing you some insight into what we're thinking and what we're trying to do going forward. So again, we appreciate you joining this panel this morning. We appreciate the opportunity to sponsor, given the opportunity by FIX, and we look forward to working closer with you all going forward.
Thanks, Peter. Thanks, ICE, for supporting this event.
Our pleasure.
The ETF primary volumes are record and growing. It's an increasingly important asset class, and it's being widely used by brokers, liquidity providers, authorized participants, sponsors, and the overall ecosystem. Yet there is an inefficiency and lack of common or standard ways to connect across the ETF primary trading processes and ecosystems. So we're going to talk about that today. We're going to talk about some of the issues and some of the ways that we're thinking about going forward to improve that. But one of the things that I just mentioned was the overall ecosystem, and that's what FIX is about. From the beginning, we're started on a trading end, but now it goes through post-trade, settlement, even down to the payments, and an ETF's same sort of plan in place. And the panelists we've picked for this panel today, you will see go across the full ecosystem. But let me just start by asking each of the panelists to introduce themselves and to tell us what their role is in ETF. Nick turns out is the chairman of a new ETF working group. So for FIX. So Nick, let me just start with you. Could you introduce yourself?
Sure, and thank you, Tom, and thank you, Peter, ICE, for sponsoring the event, and Fix and Deborah for putting it on, and for all those in attendance, thank you for giving up an hour. We hope it's going to be worthwhile. So yeah, Nick Hodge, I've been at BlackRock for about 6 years. I can split that down the middle quite neatly. The first 3 years was in iShares. I was in a group called Global Markets. That's a function that sits between PM and the street, focusing on fixed income ETFs mainly, working with Bloomberg, State Street to improve analytics within fixed income, aggregated cash flows, working with TradeWeb to help them roll out their RFQ platform in the US. And then a lot of focus on the primary trading ecosystem. 3 years ago, I joined a group called Aladdin Product Management, and there it's been full on ETFs, working with the ICE folks to help roll out the ETF Hub, which we'll talk about. But my role in Aladdin, which is used by both BlackRock and a growing number of institutional clients, is to improve the technology and also the supporting ecosystems around all things ETFs.
All right, great. Jim, could you introduce yourself, please?
Sure. Good day, everyone, and thanks for joining. My name is Jim Goldie. I'm the EMEA Head of Capital Markets for ETFs at Invesco. I've got about 15 years experience in the ETF industry, starting off with sell-side roles at Morgan Stanley and Goldman Sachs, and the last 7 or 8 years have been spent on the issuer side, firstly at Vanguard, and I've been the Head of Cap Markets at Invesco for the last 5 years.
Okay. Thanks, Jim. Jeff?
Yeah, hello. Jeff McCarthy. I'm at Bank of New York Mellon. I'm currently responsible for our ETF strategy and offering and ensuring that we're building and offering firm-wide solutions to the ETF ecosystem across our bank. I've had about 15 years experience in the ETF space, both at the bank side, at the asset servicing, as well as on the exchange space, previously leading the listing and trading for ETFs at NASDAQ.
Okay, thanks, Jeff. Peter, please.
Yeah, Pete Worstelman. I've been with ICE a little over 6 years. The past 2 have been heavily focused on launching our ETF Hub platform. And most recently, I've assumed responsibility for our fixed income trading solutions, properly known as ICE Bonds. And ICE Bonds has both our ETF Hub and our execution protocols across RFQ, portfolio trading, click to trade, and it encompasses a lot of the solutions that we're trying to provide.
Great, thank you, Peter. We're going to have a couple of audience polling questions. So Deb, can we put the first question up, please? So the volume of global ETF assets under management stands roughly at $500 billion, $1 trillion, or $5 trillion. I should mention while waiting, I introduced Nick as the chair of the new FIX ecosystem, ETF ecosystem working group. Peter has been kind enough to agree to be the co-chair. You'll see more about it later, but if you want to be participating in that, you should contact the program.
I think we need an acronym for that group. It's a bit of a mouthful, isn't it? So yeah, if we can have a poll at the end, we can come up with it.
I'm sure one will evolve. Deb, do we have the polling results? Wow. So Nick, 4% think it's about 500 billion, and 35% think it's about $1 trillion, and 61% think it's about 5 trillion. What is the correct answer? And if you would, just talk about the size of the market and how it compares to other asset classes.
Yeah, so the majority of you were closest. It's actually a little bit bigger than 5 trillion. I looked at a report yesterday, and globally, ETF AUM, look, ETFs, true story, are pretty popular. 6.88 trillion. So a little bit higher than 5 trillion, but it's a pretty big number. Year to date, just to give you a scale factor, just under $500 billion in net new assets year to date globally. Thematically, at least in the US, some of the big winners there are sort of fixed income and ESG. Last year, for context, so we're at about 500 million already year to date. Last year, full year was $551 billion. So large numbers, and this year is on track to outperform what was a pretty big last year. But I think, you know, while these numbers are really pretty staggering, they're dwarfed by the opportunity for the industry ahead. Because if you look at ETFs versus the underlying markets, they're pretty small. So depending on your model, but within equities, low single digits of a percentage. So equity ETFs, low single digits of a percentage of the equity market. And within fixed income, a smaller fraction still. So within fixed income, again, definitions of a fixed income market could vary, but somewhere between just 1% and 2% of the overall market are in fixed income ETFs. So yes, big, but versus the underlying market, still just a small percentage. So we do think there's some really significant upside ahead. So that's just like the assets, but you know, assets are created through the creation and they're lost and shedded through the redeem mechanism. And that's where we want to sort of focus at least a decent chunk of the conversation today, because to get to that, what was it, $500 billion in net flows year to date, the gross flows in the primary markets are multiples of that. So let me give you again the numbers just to sort of directionally correct. They may not be exact, but we took some numbers from the Bloomberg terminal. And if you look at what's publicly available, which is sort of gross flows, shares outstanding. Now, that's not a perfect metric because it doesn't show offsetting create redeems in a single ETF, but directionally it's pretty good. $4.7 trillion was created or redeemed last year, right? The full year, $4.7 trillion to get to a net flow of 550. So almost like 9 times the net AUM is being seen in the create redeem flow. So huge stresses and huge flows on the numbers. And again, last number I'll give with you, but where are we year to date? We're at that number that we saw in 2019 already. So we're on and around like $4.5 trillion in gross shares outstanding year to date. And obviously there's still a quarter to go. So we annualize where we're at. Create redeem flows are up 20%. So Tom, to your opening comments, it is a huge undertaking to look at the ETF primary system, the create redeem, and work that we're going to discuss around standardizing and simplification, I think, are mission critical to allow the ecosystem to continue to grow. And so hopefully those numbers give some sort of context to the discussion that we're going to have.
Hey, Nick, that's very good. It really helps understand why we're putting a big focus on this initiative. Jim, as we said earlier, global markets, right? Can you talk a little bit about the nuances between the differences in the U.S. and the Asian and Latin America and EMEA markets?
Sure. Yeah, so I think as Nick mentioned, there's well over $6 trillion now globally. And if you look at the way that's split, there is local platforms in Asia and in LATAM, which are service local client bases. The two wrappers, which are more international in nature, are the 40 Act funds in the US and also the European domicile usage funds. So if you look at those two platforms, there's just under 5 trillion in the US and there's just over 1 trillion in EMEA. But if you look at the way those are broken down, in the US, there's roughly around 2,300 funds. There's a few main exchanges, a few main settlement venues, and generally traded in dollars. Now, if you look at EMEA, we have 3,000 funds, but almost 9,000 different listings across more than 20 different exchanges. So there's a much more fragmented marketplace for European ETFs, but they do track a lot of the same or similar benchmarks. Now, we have seen growing adoption from the UCITS ETFs from Asia and LATAM. And a lot of that is because, as I mentioned, you can have UCITS ETFs listed across a number of different exchange venues. So now you have the capability to have UCITS listed from Mexico to Hong Kong and everywhere in between. So you have additional access, being able to trade in local hours, and also there's a performance differential or potential performance differential between non-US investors buying a UCITS ETF versus a 40 Act ETF. If we take a simple example using the S&P 500, a non-US investor buying a US domiciled 40 Act ETF can endure up to 30% withholding tax on the distributions. If the same investor was to buy a UCITS version of the same product, it could be 15% or even 0%, based on how that product is structured. So that's the product structure in EMEA is another key differential between the US and in Europe. There's 30% of the UCITS ETFs are actually synthetic in nature or swap backed, which is not as common in the US. And the reason for this is generally two main different reasons. Could be to improve tracking, or more generally to be able to offer out performance, as I mentioned earlier. And that is driven by the withholding tax on US securities. So if you're a physically backed S&P 500 ETF in Europe, you have to pay generally 15% withholding tax on the dividends of those securities. Whereas in the synthetic format of the wrapper, you can get gross dividends. So as I mentioned, a non-US investor buying a 40 Act product that may have to pay 30% withholding tax, you can get the same product in a UCITS wrapper and pay 0% withholding tax. So you have that dividend uplift, which is why we're seeing the UCITS wrapper gain more traction in regions outside of the core European markets, such as LATAM, the Middle East, and Asia. However, having this additional access and a number of different local venues that these can be listed on, it does bring around the problem of fragmentation. And if you think about the trading and liquidity of managing one fund which is listed across the globe in a number of different formats with share classes, it could be currency hedged, they could be accumulating or distributing in terms of the dividend. They could also be in a number of different local currencies. That obviously creates a challenge for the broker community. But also, in addition, in Europe, we don't have any consolidated tape here. So being able to actually showcase the true liquidity and volumes of UCITS ETFs the same way as you do via consolidated tape in the US is very difficult, because there's no one point where you can look at an aggregated volume of OTC and on-exchange trading across all those different listing venues for UCITS ETFs. So we always get there's a common misconception that the UCITS ETFs may be lacking in liquidity. However, as we will explain a little bit, talking about the primary market, they're an open-ended wrapper, and the liquidity tends to be more driven by the underlying rather than the ETF itself. Another nuance we see in the European market is the settlement. As you can imagine, the fragmentation that you have having so many different listings of the same fund, brokers have to manage multiple positions for one fund split across a number of different trading venues and a number of different currencies. Now, that means that they have to realign inventory between these different venues, between these different listings and CSDs, and that can delay settlement, which can be problematic for some countries where you have particular sensitivities around settlements, or some no-fails countries. We have in the last few years seen some advances there in terms of enhancing the overall settlement model. We've moved more from a local settlement model to an international settlement model for UCITS ETFs, which allows the realignment of inventory brokers to be a little bit more streamlined, but it's still a difficult thing that they have to manage across a number of different listing venues, which can hamper the growth of the European product. So there's some of the main nuances between the regions. As I said, we'll go into the primary market side of things, the create redeem mechanism, and a little bit more depth later on. But this is part of the challenge, and also part of the positives of having international wrappers such as the 40 Act products and the UCITS products, which we have in EMEA.
Thanks, Jim. It doesn't sound like there's going to be a shortage of issues that we have to address as part of our.
Not at all.
It sounds like prioritization is going to be the big issue. Okay, what do we do first, right? But anyway, Peter, maybe you could just tell us how. You mentioned during the intro that the ETF Hub business which you run. Maybe tell a little bit about that and how it supports the ecosystem.
Yeah, I'd be happy to. And it hits on, a number of the things that Nick and Jim just mentioned, right? So we announced the ETF Hub in the summer of 2018. And, that was after consultation with our development partners, our initial development partners, BlackRock and a number of others, around ways to improve the primary market workflow, right? When you looked at the landscape, there were a number of different platforms and protocols used. And, there was a belief that, standardizing that will allow for the market to reach that next leg of growth, right? And you look at the figures that Nick laid out, if you start to bring in standardization and further automation into the workflow, that breeds confidence and it brings more people into the ecosystem. You couple that with, some of the regulatory changes that we had here in the States with 6C11 and allowing for a broader range of participants to come in and do custom baskets. That further led to us realizing that there's an opportunity to bring in standardization into this workflow. Again, focused on the primary market. So the order entry of those creation and redemptions and the custom negotiation that goes with those products that support that workflow. When we evaluated it, we could have gone about this in a multiple different ways, create another GUI and have people log into that and create a modernized front end, or go down a more modernized approach and introduce an API that multiple parties can build to and try and create the standard. And when our team evaluated that in consultation with BlackRock and the advisory committee that both Jeff's firm and Jim's firm sit on, we determined that Fix is a good path to go down, right? There's a lot of familiarity with that in a number of different aspects, as you mentioned earlier, Tom. But Fix is not common to the ETF space, right? So it's kind of groundbreaking that we've brought that into the workflow. We've launched that into production. The hub launched in October of last year via Fix. So we have a Fix connection with BlackRock as an issuer. And we also have an API that the AP community is currently reviewing and some are building to. So one of our community members, Bank of America, is on track to have that connected by the end of this month. So what we'll have via the hub is the first full end-to-end communication of a creation redemption order over the Fix protocol. Now, I think we'd all admit, and we've reviewed it with our advisory committee members, is the current API that we have perfect? By no means. There's a lot of improvement, and that's why we wanted to create this working group to help review the API and further enhance it, to bring further standardization into the workflow and account for other players in the space. So that's what we're hoping to achieve with the working group. But it's not just the order entry API that we've created over the Fix standard. We have a variety of other APIs based on Fix to, again, allow for seamless communication back and forth. And that API has to do with the custom basket workflow. So that's going to revolutionize the way that custom baskets are handled, moving away from a manual process over chat or the phone to allowing traders at either a bank or a market making institution to seamlessly communicate with their issuer to shape that basket real time. And again, over Fix, allowing that to be seamlessly communicated, it will compress the time frame of those creation and redemptions and allow for more activity in the market. When we looked at the hub and how to enter into the space, we weren't trying to replace any of the incumbents. What we wanted to do was establish a pipe over Fix with existing front ends. So Jeff and his team have a front end that their issuer base use. There are other competitors that have some as well. What we are seeking to do is be the entry point for the AP community to communicate seamlessly over a Fix protocol. And what we've done, we've started with the US. As I mentioned, the hub went live in October of last year, and we've had successive releases over the past 12 months. And then we're going to look to expand into the EMEA region. To Jim's point, there are a lot of nuances that will require further work on the API and the communication structure. So that's an initiative that we have currently started. We're doing the review process and hope to expand to there over the course of 2021. And I think it's important to just make the audience aware, and it'll be discussed as part of the working group. While we went into this looking to improve the communication process around creation redemptions, whether it be the order entry or the custom baskets, we have heard that there are other pain points around the settlement and the confirmations. And it's worth looking into whether or not FIX can play a role in improving that as well. And that's what this working group will strive to do. We've gathered a good group of institutions to help funnel in feedback and review APIs and make sure that we all collectively agree with what the standard should be. And again, we feel FIX is the right path to go down.
Well, thank you, Peter. And questions are coming in already, and some for you, but we're going to allow Jeff to talk first before we start answering questions, right? And Jeff, maybe just talk about, and Peter said you're on the advisory committee, maybe just talk about some of the challenges in the ETF marketplace, if you would.
Yeah, sure. And so some of them were discussed, I think, by Peter, by Nick, and by Jim. So we won't be repetitive to those. But I think the overall theme, I agree with. I mean, ETFs continue to grow. And if they're going to reach the 10 trillion, 15 trillion, 20 trillion that we all hope they do, there are a series of challenges which create opportunities really in the market for innovation and to improve the ecosystem end to end to help facilitate that. And I think all of our end goal is improving the investor experience and therefore the cost to the investor in investing in these type of vehicles versus alternative sets of products. So I kind of everything Jim said was covered about EMEA, fragmentation, the liquidity pools. So when I look at the challenges in the ETF market relative to this discussion too, it's about market structure. And I think you can break down market structure in various different formats, and everything that Peter said about standardization and efficiency, also holds true and kind of can be bucketed in market structure. And when I say market structure can be dissected a few ways, it's both the primary market and the secondary market. And I know there's been a lot of work in the secondary market, at least in the US, just to aligning trading rules, listing rules, and various different access points for these products. But on the primary market, it's 100% accurate of the way that creation and redemption order volume comes in and it's captured. The necessity for consistency is very important. And I think through the FIX working group and through dialogue in the market, coming to a consensus and a standardization is very important in that aspect. Because the individuals and the intermediaries, the authorized participants and direct dealers in this space, they should not have to worry about where they are placing an order or in what format or the data that they are getting back, either in a confirm or information that they need to price effectively in the market as a competitive reason. There's lots of other ways to compete in the ETF space to gather assets into your products, but the protocols and the process in which you access these products is not necessarily, I would not define those as a competitive advantage versus the products themselves. And it doesn't matter what industry you're in, there's a lot of different reasons in there. And so, market structure, but also into market structure, I would say is nomenclature. So how these products, exchange traded products, exchange traded funds, exchange traded notes, I do think that the industry could also benefit from more consistent rules around the way that these products are named, as well as the data points that are delivered back out to the market on these types of products. Because again, there are many different formats and many different processes today, and bringing those together would be extremely beneficial for the market and the continued growth. I'll pause there.
Thanks, Jeff. And as I said, if you have any questions, please submit them. That was great, summary by everybody. I just want to give the other people on the panel any comments you want to make on what other panelists said, to reinforce anything they said or anything we missed before we go to the next questions we're going to ask of the audience.
Yeah, I mean, I'd just like to touch on the primary market process that we've been discussing here, because I think innovations like the ETF Hub are definitely there to be able to assist the growth of the industry and can revolutionize how primary market orders are traded. It's definitely a challenge that we face in EMEA, given the different ways which ETFs can be created and redeemed here. And as I mentioned before, you have the synthetic ETFs where you have the swap and the basket to manage on the back end of it. In EMEA, there's what we call a directed cash process where APs who are market makers can then outsource the trading of the basket to a PT desk of their choice to be executed in a manner of their choice, i.e. VWAP or TWAP, rather than it be a market on close execution. So there's a number of different nuances to that primary market process. And I think if there was a consistent approach that could be adopted across the globe, that would really allow people to manage their ETF trading more efficiently, but also to encourage more entrants to come into the market, which can only be better for liquidity provision and just the overall growth of the global ETF market.
Peter, you wanted to say something?
No, I agree with what Jim said.
Okay, why don't we ask the next question of the audience, right? What specific areas would you like FIX to focus on with respect to ETFs? And most of them have been mentioned in the updates that were given by the panelists. Order placement, fixed income, custom and kind basket, creation redemption process, consolidated tape for European ETFs, and fund holdings. So yeah, some good choices there. I'm not sure which one I'm going to vote for, but I'm going to vote. This
is timely, actually, because I'm deep in 2021 planning. So the answer here is going to be a good data input.
Yeah. Wow. The creation redemption process at the top of the list. Consolidated tape for Europe. Jim, I don't know. Consolidated tape for Europe. I don't know. I don't know how many years I've been hearing about the consolidated tape for Europe.
Yeah, I mean, I think that would be a great innovation. It's definitely something that I think is great in the US, that you can point to the number of shares that have been traded in a given fund on a given day. That's something that we don't have here. The way that the process works in Europe, you have the multiple exchange venues that I mentioned that could be traded on, as well as all the different OTC venues that could be traded on the RFQ platforms, the MTFs. So what happens in Europe is you can have over 200,000 different single reporting items for the UCITS ETFs. And to be able to point to a single number for trading volumes in ETFs and UCITS ETFs, I think would be great for clients, because we do have a number of questions where the liquidity or the perceived liquidity doesn't seem to be there for clients. A lot of clients will reference the on-screen liquidity before they will actually trade an ETF. And I think being able to have a consolidated tape and showcase that would be a great move forward for the UCITS market.
Nick, were you surprised by these answers?
Not really. I guess a regional split of the responders would be interesting. It could be that 23% of the audience is from Europe, and their number one thing is that. So, but yeah, that they hit on the areas that I was thinking was going to be important. I think the fund holdings at the end, that may not be an area where FIX is most suitable. That could be, FTP. It could be more standard APIs. So I think this resonates with me, and I think, I don't know if I can have the opportunity to expand, but I think, this is a journey, right? And as Pete said, the ETF Hub went live, a little over almost coming up to a year ago. We have just a fraction of the workflows, the functionality of the regions covered. And it's going to take, a pretty significant effort from all participants to pick the workflows in priority sequence and apply the best processes, the best specifications from FIX to that. But there's quite a bit of work ahead of us.
The questions, as I said, have come in. Peter, while you were talking, somebody asked, is there a fee for connecting to the ICE Hub?
Yeah, I saw that. I actually just typed separately to that. So yes, we do have an economic structure to compensate for the value that we bring in. What we've been doing since launch is the hub has been for free, and we've launched pilot programs to allow institutions to come in, realize the workflow, see how it impacts them, and then they can structure the economic package accordingly. But yes, there is significant build work that goes into this. So there is a cost for the connection, but the value proposition and the efficiencies that the hub brings should far outweigh the cost outlay.
I think that's important because, yeah, it's one thing having a Word document which outlines the fixed specification, and it's another thing, whirring up the machine in your particular firm to find funding to connect via fix. So we understand, as I said, by going back to my earlier comment of it being a journey. For those fix aficionados, we've modeled, so we've got, as Peter mentioned, so we've got a productionalized fix flow for create redeem orders in the US. It's using 35 equals D, so a new order single message type. That was a little bit unique to, at least to BlackRock and iShares, because normally we're the ones sending out the orders, and in this workflow we're receiving the orders from the APs. So we've modeled it like that, but to Pete's point, it's not complete. Right now, it covers a decent chunk of US listed funds. It covers domestic equities. It covers fixed income. It doesn't yet cover international equities. We haven't given too much thought about how does it work for synthetics? How does it work for some of the active non-transparent models, for example? There isn't yet a regional dimension to the specification beyond the US. And then we sort of look at the other workflow, which is in production, which is for the custom incline basket. And Pete alluded to the growing interest and popularity in that workflow because of SEC ETF Rule 6C11. A growing number of issuers want to participate, and this fix workflow is pretty neat, and it's got a few things left to do to improve it. But that, again, for those that are really into fix, that's using an IOI message, 35 equals 6. So that's allowing a market maker to send an issuer a list of bonds for consideration. The issuer will do their thing. They'll assess them. They'll see the fit of those bonds to the given ETF. And then the fix message spec will allow for sort of automated or detailed feedback. And so there you can really see this process become far more streamlined. In a way, right now, it's through different channels. It's human beings typing in, typing back. And so with the fix flow, you can imagine a future where a market maker, an AP, is able to submit a list of bonds electronically over fix via ICE to the issuer. The issuer's running an assessment process, sending back the feedback. And I think that's the type of workflow that allows market makers, APs, issuers to become more efficient and to allow us to both sort of enable that growth to the numbers that Jeff talked about, to the 10, 15, 20, but also to support it, right? So it's two dimensions I think that fix allows. It's one, it's you can enable growth through efficiencies and streamlining, but you can also support it. So it's those two things that we're really looking to fix and the workflows to provide.
Nick was asking at the beginning whether it would give time back to people if we finish before. Well, it turns out we have backlogs of questions. We're not going to get to them all, but we will respond afterwards. So the answer to your question is, Nick, no, from that point of view. But the ones we have, Deb, I can see questions on the Q&A. Do you have others that you see, or is it the same ones that I see?
There are some additional ones, Tom, that have come in via email.
All right, why don't you pick one then?
All right. Could you comment on the volatility controls?
If it gets really volatile, the overall market, is that what you mean?
Yeah. Any thoughts on how to control excessive volatility, for example, circuit breakers or auction collars?
Now, is that it's tough? Is that a generic market question, or is that?
I think that sounds like a generic market question because it sounds to me like because of ETFs are so important now. You do have the limit up, limit down, and those kind of issues. Does ETF play into that into that issue?
I'll take it from an ETF Hub perspective and what we're thinking, and then I'll let Nick, Jim, and Jeff kind of opine. But this has been a question by a number of our existing community members, and making sure that there's a throttling. That if on volatile days, somebody comes in and there's a fat finger or excessive orders coming in through the hub, how can we control that? And that's something that we are enhancing in our upcoming release in December. So a number, and they may be on this call today, but a number have asked for that extra belts and suspenders to make sure that, what's coming into the hub is, makes sense, both from a size perspective of the actual order and the number of orders. That's the best way that I can answer it from the hub. I'll defer to, the crew if they want to talk about it broadly from a market structure perspective.
Yeah, Peter, I guess this is Jeff. I'll add, since currently we do process a lot of create redeem orders as well. I mean, I think that's great. And I think this is an area that we should all collectively look at, right? And if it's looking at making sure that, as we are connected today, right, for example, ICE and Bank of New York Mellon, right, there's also opportunities to create contingency backups. So, for example, in your example, if an AP is using ICE as the primary order capture for an issuer's products, right, there can be a secondary backup system or an alternative method as well that could be used in the event of any unforeseen issues. And also, I think there's opportunity, right, for all of us to build any additional communications and second layer checks, especially if it's dealing with the downward flow from an order system like ICE down to the asset servicer who's acting as the custodian and processing some of the downstream widgets and processes, to put in those secondary checks to see and identify if anything is out of the norm.
Yeah, I agree with that.
Okay. All right, great. Thanks. One of the, it's not a question, it's a comment by actually Jim Northey, who's the co-chair of the Fixed Technology Committee. And he's talking about, that we have modern APIs and, using JSON, simple binary encoding. So I think we don't really have to talk about that. I think what we'll do is just make sure that, we get Jim involved in the working group, Nick and Peter, because he really has a lot of, very good background in terms of the use of Fix, and not necessarily using Fix engines, but, using APIs. So we'll get Jim. We'll get Jim.
And to the question, yes, I am aware of that, and love to engage you on that discussion.
We're running out of time. One of the questions, and I'd like to, lead into the final question about, how we're talking about standardizing and simplifying the ETF full life cycle and ecosystem. And maybe Nick, you can start on that by talking about, your vision for that group. I know you folks had a kickoff part of it, but one of the questions had to do, of course, with the creation redemption process. So, if you can talk about that in your answer, that would kill, two questions at the same time, if I could ask you to.
Yeah, so the create redeem process is quite a broad phrase for what is like the order placement plus the custom inclined process plus other parts of the work stream. And so the purpose of the Fix ETF working group is to look at what's in place right now with ICE ETF Hub and refine it and champion it and extend it, right? It's pretty straightforward in terms of the remit. We know that it works, we know that it's not perfect, and we know that we want to improve it. So the purpose of that group is to do just that. Where does it not work? Where do we need to extend it, be it functionality? So for example, right now, the existing spec doesn't allow you to edit a place order, for example, right? We've talked about the other asset classes, the regions. Jeff and others alluded, maybe there's a role for Fix in the AP confirmation process. Right now, for example, some people send emails, right? So is Fix or is an API solution a potential benefit there? So the purpose is really to do like a continuous front to back sweep. Maybe there's some stuff in ETF secondary trading, right? We haven't really talked about that because people have been trading ETFs on the secondary market, either RFQ or on exchange or on dark pool via Fix for many years. But maybe there's something nuanced about ETFs there that we should be looking at. I think the main focus is going to be on the create redeem process. And I would split that into the areas that I've talked about. But as I said, it's a journey. I think it's awesome with what we've got so far. I think it's going to be a significant milestone when BAM will go live, accordingly to them, end of October. And that will be a true end-to-end Fix workflow. So BAM will Fix to ICE ETF Hub, to iShares and back again, all via Fix. And that's coming within, not more than sort of 3 or 4 weeks away. So yeah, that's the purpose of the ETF working group. I think the chart is up there on the website, and would love to get in touch with anyone that's got questions on that. I think my contact details are probably on the invite.
That's great. Peter or anyone, any other comments on that, on the working group?
I think it's just worth reaffirming on the fixed income side that the opportunity we have as an industry, if we can revolutionize the primary market order process for fixed income ETFs, as Nick mentioned, that currently a lot of the way that the fixed income ETFs are created is where you agree a subset of bonds to be exchanged for the ETF shares via Bloomberg chats and other mechanisms like email, using spreadsheets, and that's done by the ETF trading community with the capital markets teams, with the portfolio managers at the issuers. And it's a process that can certainly be streamlined. And if you think of the growth that we've seen in fixed income ETFs over recent years, the products that are now being offered, and also the stress test that we just went through with the fallout from the coronavirus crisis in March and April, where we saw huge volumes in fixed income ETFs. And I think that ETFs held up very well under extreme pressure and market stress. So I think that the ability for us as an industry to continue to grow at the same rate and provide liquidity at the same rate would really be enhanced by having a systematic process and a harmonized process for fixed income redeems across the industry and across the globe. So I think that would be a huge achievement if this is something that we could look at and roll out as an industry.
That's great. Thanks. And so we're actually a little bit over time on that now. So there were other questions. What we'll do is we'll answer those questions and get it back to everyone that attended this webinar. And then we'll also obviously, be in touch on the working group in terms of when that's happening. But if you have any interest on that, you can contact the program office. But I would like to now thank the panelists. I mean, this is terrific. And I think a lot of people said it. I mean, we're in a difficult time now with the overall markets with the COVID-19. And but it just seems like the focus is turned to the full ecosystem now. It used to, I've been around long enough that it used to just be trading. And if you asked for money to do middle office or back office, you really didn't get it. But the efficiency is needed across the cycle. Nothing happens until something gets settled. So we have to make it much more efficient. And we're into such an important asset class here. And that will be the job, to make it much more efficient for all of our members. And I forget who was that said it. Maybe it was Jeff, that, it's not competitive. There's enough competitive stuff going on that, we can do the things that help everybody and help the overall community.
Yeah.
And so that's what we'll be doing. But thanks so much to Nick, to Peter, to Jim, to Jeff for that. And we'll be in touch again. But let me turn it over to Kathleen Callahan. Kathleen Callahan is the operations director of the fixed trading community, and she's going to take us out of the webinar.
Great. Thanks, Tom. And thank you to all the panelists. Appreciate your perspective and expertise on this topic. This was a really educational session, which provided some insight into specific areas of focus that the audience would like to see FIX address. So in the polling, they identified create redeem process, consolidated tape for Europe, order placement, FIX custom in-kind basket. So FIX can definitely help with that. And as mentioned previously by a couple of the speakers, there is an ETF working group that FIX has launched. And in usual collaborative manner that FIX embodies, we'll bring this group together to discuss how FIX can be used to standardize workflows for ETF. So we know everyone benefits from broad representation on FIX working groups. So if you're interested in participating in this group, please contact the program office at fix@fixtrading.org. Additionally, FIX has other active working groups that are focused on expanding the use of FIX in the trade workflow. So the Lifecycle and Ecosystem Working Group is looking to identify efficient segments within the trade lifecycle and create connections front to back. The Post-Trade Working Group is focused on driving automation further down the post-trade chain. Last year, they launched the recommended practices for payment messaging, And this year they'll be focused in on netting and settlement instructions. So anybody interested in the above mentioned groups or any of the other active working groups that FIX has, please contact the program office. So FIX has a couple of events for the balance of the year. On October 20th, the Asia Pac Trading Summit in Hong Kong. November 23rd and 27th, the Virtual Trading Summit, the Asia Pac Virtual Trading Summit. A number of events, Australia, India, and Japan were canceled this year because of the pandemic. So this will provide a platform to discuss the topics that would have originally been covered in those events. And there's also the plan for an outsourced training webinar in November, that date to be announced. So please continue to go back to the FIX events page for any particular updates on events. Once again, just would like to give a big thank you to ICE for hosting today's webinar. And that will wrap up our session for today. Thanks to everyone and stay safe.